So in my mind, those are three critical things that you can use AI to study: cost, customer satisfaction in the inputs, and then resilience and being able to pinpoint things that could go wrong so you can reduce them. And AI can help you do that better than any tool that we've had before.
Welcome to Deliver, the last mile performance podcast where we explore what it takes to operate, scale, and differentiate in today's market. I'm your host, Guy Block, and I'm the CEO at Brink.
And I'm Raquel Zanoni. Together, Guy and I chat with some of today's most knowledgeable retail and logistics leaders to discuss the last mile, specifically how it's evolving and what success looks like.
Today's guest is Ben Gordon, Managing Partner and CEO at Cambridge Capital and the founder of BGSA Holdings. Today, he invests in and advises the next generation of supply chain and logistics technology companies. And for the past 20 years, he hosted over 400 executive leaders at the annual BGSA Supply Chain Conference.
I actually really loved his point on starting with the problem and not the technology to create success with AI. The companies that tend to succeed with AI define a specific use case and then find the right tool. The ones that struggle with AI start with technology and then go looking for a problem or a place to put it.
Well, I really like this point on how AI's biggest logistics impact is not flashy, it's practical. Ben shared an example of a company that deployed AI agents to take their quote response rate from 60% to 100%. They also cut response time from 20 minutes to under 30 seconds. In a down freight market, they drove revenue up, drove margins up, and created a 56% stock increase.
Now, let's jump into the full conversation, and don't forget to subscribe to get future episodes.
Hello, Ben. Good to have you here with us on the Last Mile Performance podcast Deliver. We're excited to have you here. How are you doing today?
Doing great, Guy. Pleasure to see you again.
Pleasure to see you. So Ben, you've been at the intersection of logistics and technology longer than most, from founding 3PLX in the late 90s to investing in the next generation of supply chain leaders at Cambridge Capital. From that vantage point, how has the conversation around last mile technology investment changed over the years, and particularly now with AI?
Well, since you referenced the beginning, I'll tell you, when I started my first company 27 years ago, Threeplex, which was a SaaS TMS company, last mile wasn't even part of the conversation. In fact, when I went to Silicon Valley and talked to venture capital firms about what we were doing, and I said, well, our name is Threeplex because we're execution software for 3PLs. And you know the most common question I got? What the hell is a 3PL? So it's miles and miles apart from then to now. When you look at today, on the other hand, look, I think the awareness, curiosity, and desire to solve problems in last mile, whether you're talking about venture capital, whether you're talking about Fortune 500 companies, logistics firms, software companies, or anybody else in the ecosystem, greater than it ever has been. Greater than it ever has been. And I think that's because, number one, we all became painfully aware of how important it was. You don't know what you're missing until it's gone, right? And so 6 years ago, when we all experienced the shutdown of COVID, last mile became really important because you couldn't get anything and you couldn't go anywhere. And there were shortages of everything from semiconductors to chicken to toilet paper. And so all of a sudden, last mile went from being a curiosity to a subject of cocktail conversation, of all things, to a vital need that everybody cared about. So look, I think today, last mile is more important than it's ever been. And while it used to be the case that this was something that people didn't even know about or think about, it's now very much important.
You know, with the AI investments in logistics, it's just accelerating. There is still a wide gap between what gets funded, what gets piloted, and what actually improves last mile performance. So sorting signals from noise is one of the biggest challenges executives face right now, and we see it firsthand. So as an investor, you see where capital is actually flowing in the logistic technology. Where are the most serious AI bets being placed in the last mile right now?
Well, a couple of parts to your question. First of all, let's talk about venture capital and logistics, then let's talk about AI, then let's talk about last mile. Venture capital and logistics, about $12 billion being invested in the logistics ecosystem. And by the way, if you compare that to back in the beginning, the 27 years ago comparison, the number then was a fraction of that, less than a tenth of that. So the magnitude of capital and interest in logistics and supply chain software is just off the charts compared with where it used to be. Secondly, there's the issue of AI. Interestingly, while 5 years ago AI existed, but it wasn't a major focus nor a major part of the dialogue, today, something like 65% of all venture capital is in AI. And that's true in logistics as well as it is in other areas. Now, some of that's skewed by large companies. So, for example, not in logistics, but more broadly in general, companies like OpenAI and Anthropic, of course, raising hundreds of billions in aggregate, skew the data. But that's true really at all levels, including at the earliest stages. And it's true for the companies that we see in logistics and supply chain. And then third, you have the issue of AI in last mile for logistics. And there, look, there are plenty of interesting early stage startups, companies that we see at Cambridge Capital. And then there are plenty of successful companies that started out as SaaS and are figuring out, how do I infuse AI into what I'm doing? Bring, obviously, one great example of that. But I think that's true across the board. Anybody that's a software company today has to be thinking, and hopefully more than thinking, about how do I pivot from the last thing to the next thing? How do I pivot from traditional to SaaS to AI? And I think that's true for just about every company that we look at today at Cambridge Capital.
I'm curious, out of that 12 billion number you mentioned in last mile logistics, or excuse me, in logistics, specifically venture capital logistics, do you know how much of that is specifically in the last mile
is less than 10%.
Focused on the last mile?
That's not surprising because last mile as a percent of total supply chain spend is in line with that. I mean, if you think about it from a macro standpoint, you've got warehousing and inventory management, you've got transportation, and then you've got other forms of supply chain analytics. So there are, these big blocks. In fact, if you even take a step back and telescope to the overall supply chain sector, there's over $1 trillion in U.S. supply chain spend, of which about 600 billion plus is transportation, about 100 billion plus is warehousing, and then about 300 billion or so is in the realm of inventory management, working capital, and the supply chain capabilities around that. So last mile as a percent of total supply chain was less than 10%. So it wouldn't be surprising that the same ratios hold true for venture capital.
Maybe that helps us frame the next question that I have, which is a little bit about AI, but we can probably expand it to technology spend in general. From your perspective, how should companies think about what to focus on across their supply chain when they're investing? And we can frame it with that AI lens, but I think the ultimate goal being driving measurable returns.
Yep.
So where do you see that technology
it's a great
spend
question.
Today? Where do you
at
think
our
it should
annual
be?
Conference in January, which, by the way, for 20 years, we've hosted over 400 of the top CEOs and leaders in the global supply chain arena. This was a huge topic of discussion. And I'll share a couple of observations on this. Number one, when you think about where AI has the biggest impact, it turns out that supply chain is number one. There was a Stanford study that showed of all the different verticals where you could apply AI, the biggest cost savings are coming in supply chain. That makes sense because there's a lot of low-hanging fruit, whether you're talking about last mile or inventory management, deciding where do I put various things, various analytic decisions involving lots and lots of data. Supply chain is ripe for that. So that makes a lot of sense. Within that, if you want to talk about an example or case study, a great one is in the public markets because there's lots of data around this. So in the realm of U.S. domestic transportation, we're now in year 4 of what's normally a 1-year recession. Okay, so typically freight cycles, go up and down over the period of a year or two. But in this case, the freight recession that began in early 2022 lasted 4 years. I actually think it's over now, and the data over the last 3 months reflects that. The point is, 4 years, record drop in prices in truckload, dry van truckload rates dropped over 50%, record bankruptcies, whether in trucking or logistics or other areas around that. So there's a lot of pain all around. Despite that, one of the interesting things to note was one of the top performers in the entire S&P 500 last year happened to be a truck brokerage and logistics company, C.H. Robinson. They were up 56% last year. How the hell did that happen? Well, it turns out that AI was a big part of the story. So Robinson made a decision to focus on AI. They launched 30 agents. And one very practical thing that they said they wanted to solve was they wanted faster and more complete response to requests for quotes from customers. So it turns out that lots of companies have this process. You might want people to go through your portal, but guess what? Customers communicate the way they want to, not the way you want to. So lots of it comes in by email. Robinson, with thousands of employees, you could imagine the hundreds of thousands of emails that come in. And it turns out that they were only responding to 60% of the requests for quotes. That's kind of amazing. I mean, imagine that, people ask you to do something and offer to pay you, and you ignore them 40% of the time. I mean, that's a staggering number. And so the first goal was, how do they get the response rate up from 60% to 100? And the second goal was, how do they cut the response time? Turns out the average response time was about 20 minutes. Well, in the freight industry, as you know, and as your listeners know, 20 minutes is not good enough when you're making real-time decisions. So the agents focus on those two problems first. They managed to drive the 60% response rate all the way up to 100%. And then they managed to take the response time down from 20 minutes to less than 30 seconds. Okay, fantastic, right? So no surprise that in a year where the freight industry was getting crushed, C.H. Robinson had revenue up, gross margin up, bottom line up, metrics across the board up, and stock price reflected all that, 56% increase. So to me, that's one of the best examples to show that AI isn't just about something that techies talk about. It's something that smart CEOs are using to create real value and real impact in transportation and logistics.
I really like that response because I think it frames up something that we see a lot as well, which is that AI doesn't necessarily need to be this huge strategic insights into your data and pulling out all of this information and playing it back. For a lot of these companies, especially in logistics, it's removing manual processes. It's just being able to streamline or automate workflows in a way that improves customer experience, improves the worker experience as well. So I really like that you highlighted a seemingly simple but very effective use for AI.
Yeah, it's a huge opportunity.
It's indeed huge opportunity, and I'm thinking about all the areas where we can really drive performance in last mile, and anywhere from routing optimization and demand forecasting, delivery visibility, automated dispatching. There are just so many areas where you can actually identify potential investment. And I'd like to ask you, where do you think AI has the potential for the highest ceiling over the next few years?
Well, I think there are several areas where there is tremendous opportunity. So I'll give you three. One is in automating workflow. So if you think about it, logistics is all about stringing together a series of steps in order to move something from point A to point B. And those processes might be manual. They might have some software in them. AI is a fantastic tool for being able to take out process steps and automate workflow. We see that in other areas of logistics. Pallet, for example, is an example of an AI company that's doing workflow automation in freight forwarding and truck brokerage. So I think workflow is a big deal. For what it's worth, at the BJSA Supply Chain Conference in January, we have a Shark Tank where companies compete to show that they're the big winners from an innovation standpoint. We had over 60 applicants this year. More than 40 of them were in some form of AI, and most of those were some form of AI workflow automation. So I think that's clearly a big opportunity. So I'd say that's number one. Number two is using AI to be able to make better pricing decisions. This is a great opportunity because you can take massive amounts of data, feed it to AI, and then train the algorithm to make faster, better real-time decisions. Great example of that would be Greenscreens. Greenscreens is a company that we invested in, and I was actually involved in as co-founder 6 years ago. And what Greenscreens did was said, we will take your data, typically to a logistics company, but could also be a trucking company or shipper. We will run it through the algorithm, evaluate, look for patterns, and ultimately, based not just on your data, but in aggregate over $40 billion of freight data, we'll be able to tell you on a real-time basis, what should a truckload of freight cost from point A to point B. So if you're shipping a truckload of freight from New York to Miami, the old way to do it, you might have used DAT or another legacy system, and they would have told you, but that data tends to be lagging, right? Not forward-looking. It tells you what last month's data was, not right now. It tends to only be as good as what's in it, right? Garbage in, garbage out. So whereas you really want the full market, not just, the handful of subsets of data from the handful of subsets of companies. And it wasn't built for that. It was built for something else. Whereas Greenscreens was built to just solve this specific problem. And so Greenscreens was able to cut the error rate for pricing from 20% based on a study of one of the largest market competitors down to 5%. And as a result, that became not just much more valuable for their customers, but it also meant they could push decision-making down to the front lines, make faster, better decisions, take out process steps, make more money. And as a result, in the end, Triumph, which is the largest bank that serves the logistics sector focused on truck brokerage, bought the business last year. So I think that's a great illustration of how you can use AI to do a better job of pricing or really anything that involves sifting through large amounts of data. And then the third thing that I would say is cost. I think this is true across the board. We all know numerous examples. And anybody that's studying AI knows all the areas where you can take out costs. The big talk in Silicon Valley is, people are talking about tiny teams and when are we going to have the first one-person unicorn? And that might seem like a ridiculous and provocative thing to say, but the truth is you could do more as one smart, talented person with technology today than you ever could at any point in history, and AI empowers that. So in my mind, those are three great opportunities for AI in logistics.
Go ahead, Guy.
No, go.
I was just going to say, I'm sure our listeners are hearing you describe these three buckets, and some of them are thinking like, oh, we kind of do that today, or we want to do that, but we don't know how to get started, or we tried that and it failed. How do you think of framing for these big logistics companies that are kind of dipping their toe in AI, how to get started, how to evaluate maybe which bucket makes the most sense for them? Because often, they try something, it fails, and they think, oh, it's just not for us.
Well, there's the story about the guy that tried to swim across the English Channel and he swam 99% of the way and said, I can't make it. So he swam back. Don't stop, keep going is point one. Try things and keep your eye on the prize and keep moving forward. I think that's number one. Number two is work with partners that specialize this. You don't have to do it all yourself, right? I mean, look, in the case of C.H. Robinson, they did several things. They did their own internal experimentation. They hired a team of engineers, but they also worked externally with great software and AI companies as partners. So I think it's not either or. I think, do both. Try your own internal experimentation, but then also work with great companies and great partners. And, whether those are, well, companies like Bring or companies like Palette or Green Screens or various others, take advantage of that. And what I have found is a lot of the best AI companies want to share their knowledge and educate their customers, because the view is smarter your customer is, the more they're going to value what you can do and how you can help them. So take advantage of that. Ask for the help. And then the last thing that I would say is be precise about what the use cases are. What's the problem that you want to solve? AI is not a technology looking for a solution. It's much more effective when you know upfront what's the problem that I want to solve. Do I want to use AI in last mile to do a better job of mapping out my network and deciding, where my DCs going to be that are closest to the consumer? Do I want to use AI to do an assessment of my inventory optimization strategy, or do I want to use it for some other specific thing? Take the time to define upfront what you want, and I think that the ability to use AI to get there is unbelievable.
So let's talk about successes and failures in the world of AI, and specifically in last mile performance. Because as you know, many logistics and retail organizations have launched AI initiatives for the past 2 years. But the outcomes are, they vary widely. Some are very successful, some fall behind. And what we see is that the difference between success and failure often comes down to the implementation discipline, clear KPIs, as you say, clear use cases, and whether the organization built or brought the right capabilities, exactly as you described to us. So based on what you've seen in BGSA, the conference that you host every year, talking to executives out there, and looking at your portfolio companies, what are some of the reasons that AI initiatives across last mile actually worked?
Well, I think let's take both sides of that. Where do they work, and where didn't they work? So where they worked, look, I think number one, and C.H. Robinson's a great example. When you do a great job of starting with the problem that you want to solve. Robinson didn't start by saying, hey, let's go spend a lot of money on AI and be able to tell the street that we're cool. They started by saying, let's figure out how to take that 60% response rate to customers and get it up to 100%. And so I think the most successful companies are those that tend to be really good at saying, this is the problem that I want to solve. I can look at different ways to do it. I can, to quote that noted capitalist Deng Xiaoping, let 100 flowers bloom, right? Try different ways of doing it, but start by defining that problem. Robinson is certainly one terrific example. I think an example of somebody that didn't do that, and this is not just AI, but I think last mile and software in general, would be Pier 1 Imports. So one of the Cambridge Capital portfolio companies did a lot of work with Pier 1 Imports 8 years ago. And the problem that they had, of course, was if you're a customer and you have the choice between buying something from Amazon and you get it same day, next day, and tracking visibility and the whole customer experience is great, or you buy from Pier 1 Imports, and when do you get it? A week or more? What kind of visibility do you have into where's my stuff? What kind of analytics? What kind of tools? Well, you don't have any. You might be buying the exact same product, but if you have the choice between the Amazon experience and the Pier 1 experience, unfortunately, we all know what happened. So Pier 1 ended up going bankrupt, and it wasn't because they didn't have good products. It's because they didn't have a good supply chain process. And who knows, if Pier 1 had been a better adopter of AI and last mile technology, could they have figured out how to give the customer the same kind of experience that the Amazon customer got? And could that have been the difference between success and failure? I certainly think so. So to me, part of this is about technology, and part of it's also about how good are you at defining what's the customer problem that you're solving.
I don't think I've heard the name Pier 1 Imports in quite some time, actually. That was a deep cut, not since my childhood when my mom would drag me there.
Raquel,
Um,
I'm not going to ask how old you are, but I can tell you're certainly a lot younger than me.
so I think that, you've brought up this idea of AI implementation being something that you need to be able to clearly define customer or what your customers need and kind of using that to help drive your technology decisions. We certainly see that is probably the most where companies tend to have the most success when there's this top down approach. Um, Similar to that, there's always this debate about whether these retailers or logistic providers should invest in a technology, build their own. And oftentimes that can be a question of coming from the top down as well. I don't want to plant the seed, but I'm curious what you think about building versus buying and if there's a more proven or more effective strategy there, especially how it relates to AI.
So Yogi Berra famously said, when you see a fork in the road, take it. And what he meant by that was sometimes both is the right answer. And I think now is a good time for experimentation. So if 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 I were advising, and I do advise Fortune 500 companies on this very topic, I would say, look, on the one hand, you ought to have some small internal teams that are experimenting. See what you can do with it. See what you can create. We're doing that here at Cambridge, and we're a hell of a lot smaller than a Fortune 500 company. But on the other hand, also be an early adopter of great technology and great partners that are out there that can help you, particularly in areas where there are specialists. So, I mean, as an example, we have enterprise accounts with and experiment with using tools, ChatGPT, Claude, various others, fine, great, and are using those to automate various parts of our own businesses and to help portfolio companies. I mean, just to give you an example, we invested in a company last year. Won't say the name, but great company solving important problems. The website just wasn't that good compared with their competitors. By the way, their pitch deck was really good. So what did we do? We took 5 minutes. We fed the pitch deck to Claude, and we wrote a detailed prompt outlining what we wanted in terms of outcomes that would be great for the customer. We also highlighted 2 of their competitors that had great sites and what we thought were great about them. And then we concluded by defining what did we want. And less than 10 minutes later, Claude had produced an entire website that mapped out everything. And I mean, objectively, it was infinitely better than what we had 10 minutes prior. That's a tiny example, okay? Just a tiny example. It's a taste of the potential of what you could do. So, I'm not recommending that I should be the VP of marketing for our portfolio companies. I'm just saying that there are incredible things you can do. Use tools, use technologies, experiment. This is true across the entire enterprise. But then in parallel with that, go work with great companies that have great tools, whether, in last mile or returns or inventory management or otherwise. Look for companies that are leaders in those fields and then work with them. And part of the value in working with them, of course, is the benefits and the results, but part of it's also the learning, the knowledge. UPS has a great phrase so one of our operating partners, Remus Kapeskis, taught me. Remus ran R&D at UPS, and then he ran their corporate venture group, the UPS Strategic Enterprise Fund. And he said UPS judges their initiatives by both financial returns, but also knowledge returns. And that's true if you're an investor at a corporate venture capital firm like UPS, but it's also true if you're running an enterprise, right? I mean, if you're on the operating side, you ought to be thinking about the same thing. If I work with Ring or another company to do something, A, I want to know that I'm getting a tangible benefit, but B, I also should want to know that I'm learning more and getting smarter and benefiting as a strategic thinker in addition to the tangible results that I'm getting. And so I would encourage companies to think about both.
Can I dig a little deeper on the experimentation thing? Because I think it's interesting you mentioned that. I'm sure we all have a ChatGPT license. We're throwing things in there. We're getting decks. But when we think of last mile, your experimentation can be a little bit dangerous, can be a little bit scary because it affects your customers and your consumers and their experience with your brand. So with experimentation, what does that look like in the last mile? How should retailers and logistics providers experiment or consider doing that? Because it's a bit risky.
Yeah, it's a great question. And the underlying point I think is really important, which is logistics is mission critical. So you're not just going to go, I mean, there's been a lot of talk in the last couple of months about OpenClaw and these autonomous agents that can take over your computer. And on the one hand, it's great. On the other hand, what if they email your most important relationship with something, stupid or accidental? Well, take that times 100. Now you're talking about last mile. So yes, absolutely. You don't want to experiment with something mission critical where the consequences could be terrible for your customer. On the other hand, what you can do is, first of all, you can experiment with the analytics. So a great opportunity to use AI in last mile from an experimentation standpoint is to say, look at my data. Let's look at the patterns. And then let's figure out how is I doing it and show me some different and better ways to do it. What if I used AI to change my routing? What if I used AI to change, where I put my DCs? What if I use AI to change decisions about the frequency with which I do pickups from the DCs to do last mile delivery? Those are all analytical experiments that you can do, and you learn from them. And that, by the way, is one of the easiest things that I think everybody should be doing. Use AI to analyze your data and give you ideas for how you could do things better, different supply chain models. So I think that's one. Two is you can then apply it in different discrete areas. Jim Collins likes to say, fire bullets first, cannonball second. So meaning start with something tangible. The example of that might be, you're Best Buy and you've got thousands of stores. Go pick one store and try to do something different in that one location and then see what happens. You're not going to go roll something out across the entire network and then find out later that, maybe it was a bad idea or maybe it didn't work. But could you do an experimentation? Absolutely. As Guy knows, great software companies, Bring and others, do lots of A/B testing. So you say, all right, I've got something I'm going to try and I'm going to change one variable in one location versus the other, and then look at the data and see what works. So I think there's a great opportunity to do that. And then look, the last thing is, I think you can also use AI to come up with, things like digital twins, where you run hypothetical scenarios, which is, okay, here's my business now. What if I created a digital replica of that and tried to, run different scenarios? So in short, lots of areas to use AI for experimentation in last mile in ways that don't compromise the mission critical nature of the execution.
Ben, I get to speak with many logistics and retail executives, and we talk much about the last mile performance, and always in the context, not necessarily the technology and the operations, it's always about the business outcome. And how by even improving, 1 point on one of the metrics at a scale of millions of deliveries a year, worth millions of dollars for them in the EBITDA. But the dissonance is that most of them telling me that they don't know what good performance is and what to aspire to. And I wonder, as we speak about AI, where have you seen, or where do you think AI can improve last mile performance and specific metrics that matter the most to the C-suite and to the company in front of the street?
So it's a great question, because that is what matters most. What's the result? How do I deliver? And if we had the CEO of a Fortune 500 company in this conversation right now, I'm sure that's what he or she would be asking as well. So what are some specific metrics to look at? Well, an obvious one is cost. Can I run my supply chain leaner? Can I take out cost in the transportation? But cost is more than just transportation. There's also the fully loaded cost. One great area where you can use AI is to think holistically, because as an example, what happens if I spend more money on the last mile, but I'm also orchestrating my supply chain in a manner where I'm running with less inventory? Okay, so if I cut my inventory in half I spend a little bit more in transportation, but I'm saving 10 times that because I don't have as much of a carrying cost. If I have less inventory, I don't have to pay for it. I don't need the working capital cost for that. I don't need the money tied up, the warehousing tied up. There are all kinds of other ripple effects. So I think reducing cost is one great opportunity. We didn't have the computational power to be able to make those kinds of holistic cost decisions as well prior to AI. We can now. So companies that are great at orchestration can help you evaluate not just the narrowly defined cost, but the broadly defined or holistic cost. So I think that's one very important metric. I think a second critical metric is it's the classic KPIs that any Fortune 500 company cares about. What's my on-time delivery? If I reduce my cost a lot, but my on-time delivery falls off, and as a result, my customer satisfaction drops, is it worth it? Right? I mean, you have to make those kinds of trade-offs. So I think being able to look at how do I improve my on-time delivery, which in turn leads to a third metric, how do I boost my customer satisfaction? Now, there is a linear relationship between those two. And in the end, as you know, last mile is important, not just because of the transportation component, but it's also an extension of the brand, right? If I'm Nike and I don't deliver on time and my customers are upset with me, does it really matter if I saved 5% on my last mile? If I pissed off customers, then what's the lifetime value of those customers?
Come back.
They won't come back, right? So I think that another critical metric is customer satisfaction. And then you could ask, well, what are the key leading indicators to that? On-time delivery is a part of it. Accurate communication with customers so they know at all times, right? I mean, the only thing worse than getting something late is getting something late and then not knowing it was going to be late. So there's a communication element to that. So that all falls under the second heading, which is really customer satisfaction. And you can track that and track the inputs and the things that correlate with that. And then look, I think third is the kind of the holistic supply chain and what you might call resilience. Are there things that you can do to reduce the risk of things going wrong? As an example, it might be that using AI to analyze last mile patterns, you find out that, hey, if I work with certain carriers, the risk of something going wrong is higher. Or if I'm delivering on a Friday afternoon, the risk is higher because, maybe there's a higher likelihood of driver, knocking off early, for the weekend or a host of other things that might be totally unexpected that only come from a close analysis of the data. So in my mind, those are three critical things that you can use AI to study: cost, customer satisfaction, and the inputs, and then resilience and being able to pinpoint things that could go wrong so you can reduce them. And AI can help you do that better than any tool that we've had before.
Yeah, and obviously when you do it right, then you get higher conversion rate on the checkout. You have happier customers. They'll come back. Lifetime value increases over time. Company makes more revenue, reduce the cost. It all goes purely into the EBITDA, and what really matters. But in the supply chain, here is a tricky area. And it's tricky because supply chain is mainly a physical world, anywhere between trucks and warehouses and inventory and drivers and store associates. It's like so many physical elements come into play to create the perfect last mile. And I often see leaders asking themselves, and that will probably increase over time. But the question will be less about should we invest? And then it will naturally move into how do we integrate without compromising our current operations. And there is an ongoing debate about whether AI can and will replace operators or augment them. So from an investor perspective now, where do you see the balance of humans and machine across the last mile, both today and over the next few years, play together?
So, Guy, it's a great question because you might have the world's greatest system, but if it's harder for the customer to adopt because the customer doesn't want to get rid of the installed base of technology or workflow, then what have you gained? What I see is mean, I think there are a few different ways of looking at it, three in particular. One is there are companies that are saying, let us come in and run everything from start to finish and take over. And in principle, that sounds great, but it means you've got to rip and replace a lot of things. And that doesn't work for big enterprise, right? You're not going to get a Fortune 500 company to do that. Now, it can work for the SMBs. And so there are interesting AI companies that I see, whether it's in last mile or returns or fulfillment or otherwise, that say, okay, we will be the kind of the tech stack for, for an SMB and do everything. And that works great because they don't have an installed base, but doesn't work for the big guys. Then I think second, for companies that are targeting the enterprise, we see a lot more success when you add a layer on top, so you don't force them to rip and replace. Good example of that in the realm of inventory management, warehouse management would be AutoScheduler. So AutoScheduler.ai, interesting company. They were the winner of the Shark Tank at our conference 2 years ago. And their whole value proposition is they go to large companies and say, you probably already have one or more WMS installations and you rely on them for everything. It's really hard to get rid of that, just like it's hard to get rid of an ERP. We're not going to tell you to get rid of it, but we're going to point out that most WMS solutions promise labor management that they don't deliver. And we're just going to be the layer on top of that solves that. So they will come in and they'll say, we're AI powered labor management. We integrate with all the major, WMS options. Keep what you have, but use us for the labor management piece, and boom, that works. Now, that is a great solution for enterprise because they don't have to rip and replace. There are long-term questions about whether sitting on top of somebody else's platform is the path to. Are you going to build a multi-billion-dollar business that way, or in the end, do you have to be the core the core foundation? So I think there are long-term questions around that, but it's a great way to add value, make the customer problem easier, and also work collaboratively with the installed base of WMS and other systems. I think that's kind of second. And then the third are kind of the analytic tools that sit off to the side. This is, as an example, what Green Screens did, and take everything that you already have, but then solve something new. So I think whether you're trying to replace everything, but only for SMB, whether you're going to be a layer that sits on top of a platform that works for enterprise, or whether you're off to the side, I think you can win in any of those. In the long run, I mean, I think every company wants to be the platform, right? The main event, not the side dish. But there's a question of how do you get there? And do you start there, or do you get there over time?
And given that there are just so many directions, we've heard different types of buckets here, how to think about different KPIs and metrics, how to think about different layers of AI and where they fit in. For these retailers and logistic providers that want to integrate AI into their infrastructure, but feel maybe there's just too many options, what's some advice or feedback that you can give them on how to get started?
Well, I think number one, there's top down and there's bottom up. Top down, define what your big priorities are as an organization, but then bottom up, pick a couple of specific things. The C.H. Robinson example, cut my response time from 20 minutes to 30 seconds or otherwise. So I think that's what you got to have the dashboard and the goals, both top down and bottom up. Number two, look for companies that are great in whatever field you're trying to solve. You could pick one, but more likely talk to three, give them some data, give them an opportunity. Most great companies will welcome the opportunity and, run some experiments, right? The A/B testing. You might say, okay, I'm going to give my data to three companies and let's see what they each come back with, and run an analysis. And that's not just making a bet; it's an educated decision. And I think that's important. And then I think the third is lay out a roadmap where you say, okay, I'm going to do this test in this market, and then if it works, I'll roll the thing out. But I think the biggest thing is commit to starting. In the tech world, one of the metrics that for investors, public market investors, will often look at things like what's your R&D spend as a % of revenue, and that's a proxy for how much innovation do you have? It doesn't guarantee results, but reasonable assumption that if you and I have two companies and I'm spending 10% of my revenue on R&D and you're spending 20%, assuming that we're both spending the money equally well, you're going to be more successful, right? Because you're going to have more R&D, you're going to have more innovation, you're going to have more success. Well, I think Fortune 500 companies should think about using AI and working with AI companies in the same way. How much are you spending on working with AI companies? Because it's not really an expense, it's an investment, just like R&D as a percent of revenue.
Well, Ben, this is such an insightful episode, and I feel like we can continue peeling back on the onion and look at so many perspectives, but we are coming to an end. And I wanted to ask you one last question, because you do get to see a lot and you get to meet so many different sides of the market. And if you could give one piece of advice on how leaders can improve their organization's last mile performance, what would it be?
Well, I think most of us are internally focused. We look at how am I doing today versus yesterday? What do I think? Because, we can respond to what we know. But the market doesn't work that way. The market is judging you against all their other alternatives. So ask yourself, how does the consumer look at me? Going back to Pier 1 Imports from Raquel's childhood, if you were the part of the management team of Pier 1 Imports and you were having this conversation, you might be saying, all right, let's look at our metrics now and compare them with the way they were a year ago and how are we doing? And maybe you're doing 5% better. But wouldn't it be a better question to ask, which is, how does my customer compare me with the best alternative, right? How does my customer compare the user experience with me with the user experience at Amazon? And when you invert it, when you turn it around, as Charlie Munger used to say, when you have a problem and invert it, you realize that you got to solve for a different problem and it's a much bigger problem. So if you are running a major enterprise and you're thinking, how do I give my customer the best last mile experience? Sure, it's relevant to say, am I doing better now than I was a year ago? But the real question should be, who is my number one competitor? What are they doing right in last mile? And what do I need to do to be materially better than them, right? So if I'm a retailer, I should be thinking, what do I do to be better than Walmart and Amazon? If I'm a brand, it's going to be dependent on, who that is. But above all, my advice is take an outside-in perspective instead of inside-out and ask yourself, who is my number one competitor that does a better job in the eyes of the consumer? And how do I exceed that experience expectation in last mile?
Play up your game and compete or out-compete effectively. So beautiful. Thank you so much, Ben. That was a great pleasure to host you. Looking forward to seeing you on BGSA next year and continue the relationship with Cambridge Capital and all the great things you do in the market. Thank you, Ben.
Thanks.
Well, guys, thank you. Great to see you again. Raquel, enjoyed our conversation as well, and absolutely look forward to next time.